Morning, everyone. I'm Kristin Myers, editor-in-chief of ETF.com, here with a bit of an economic update. What is U.S. GDP and why are investors freaking out about it so much? Well, GDP stands for gross domestic product, and it is a formula that is used to essentially calculate the total value of goods and services that is produced by any country in any given quarter. Now, part of that formula is exports minus imports. Generally speaking, a country wants to export more goods than it imports so that the economy does continue to grow. But here's what happened in the first quarter of the U.S. We saw imports actually increase, and here's why. The U.S.-China trade war and these Trump tariffs have really caused companies to not be too certain about where the economy is going to go going forward, and also what was going to happen with the trade war. Would it be paused? Would it continue? Would tariffs be raised even higher? And as a result, they decided to actually front load some of those concerns by actually importing even more goods than they typically would in a quarter. And as a result, we saw gross domestic product actually contract or shrink in the first quarter of 2025. Here's why investors are freaking out about that. A recession is technically considered 2 quarters of negative GDP growth, and we now have just had 1 quarter. So investors are very concerned about the strength of the U.S. economy, how it could potentially be weakening, and of course, a recession. Is it going to happen in 2025, and when will it happen? So when investors see this news that the U.S. economy is actually shrinking and declining, they start worrying that a recession could be on the way. And as a result, we see markets absolutely tumbling today.